Audio now? Nice. It'll probably be a little bit wonky, maybe at the start, because we're going to need to get the replacement options chain populated. So, but eventually, I think that's going to take over. But yeah, it's going to be weird because in order to get the most accurate picture, we are going to need likely to go ahead and combine those contracts between the two pages. It's going to be weird. But it should be pretty straightforward, I think, at the beginning. It's going to lean towards the one. But most of the new stuff that's going to come in, like we're going to see new weekly. See, here's the thing, right? We don't have new. If we go ahead and look at our chain, we don't have weeklies after right now, after 7th of November. We don't have them. So after this week's going to go off the board. October 3 is going to go off the board. They're probably going to put the 2 November OPEX, the ones leading up to November OPEX. So it's going to be the 14th. The 14th is going to replace 26th. They'll probably do. No, that's it. And then they won't. Yeah. So it's just going to be the 14th. The 14th is going to replace this week. And then for the weeks following November OPEX, those are going to be the new. Those are going to be new. So that's not. Those are not going to have warrants. December OPEX, I'll bet you they don't do warrants. February, yeah, no. So they'll put these on the board. They'll duplicate these, and then they'll port whatever OI they have out there is just gonna, yeah. That's my thought. Anyway. But good question. What's up, Tom? Good to see you, man. Yeah, what's up, everybody? How's everybody's week going? Good week so far. Sounds like a resounding yes. Yeah, nice. What's up, Jake? Yeah, it's pretty good. Mrs. Mojo is feeling a little bit under the weather midweek. She's doing better today. So very happy that cleared up. Happy Friday to you. Clapped out E88. Yeah, that would have been cool. That would have been cool. Like I said, I think I did some short. What did I do? Monday I did short puts or something. I forget when I entered those. I guess Monday. I did a whole bunch of short puts for next week. I got excited because I thought maybe I was like, oh, assign me, but no, not happening. Probably, I don't know, who knows. But I also sold calls. I sold $25 calls for October OPEX last week, and then on yesterday's dip, I exited a round of those, and then we went back up today, so I just instantly re-entered them. So that was nice. Nice, man. Very good. It's exciting, right? It's exciting. And you're like, hey, my money can like go somewhere, It's not just coupons to pay my bills. It's like I can apply my gain, like I can work harder and I can apply my gainful employment toward actual material gain in life. That's pretty great, right? Hey, Chromecast, what's up? I will send my best. I'll send my best to Mrs. Mojo Queen Flower. Those puts will indeed get me shares if I get assigned next week. Yes, that is the idea. Wasn't sure, right? So like sometimes I feel when we get into these moments in these higher volatility things, like obviously if I'm not assigned, if I don't get assigned, then I'll go 1 week at a time and I'll just kind of keep walking stuff out. But if I do get assigned, then it's like, oh, okay, time to pivot over to doing some put stuff. And usually, again, like we were in this weird place, like being in the upper 26s, 27. I think, yeah, it was in the 27s. I was like, oh, I think we're kind of tapped out here. But like maybe right, and I never know with these cycles because we get to the volatility stuff, we get into the up cycle. Upside is really the moon. So I tend to be a bit more conservative on the upside than I do on the downside. On the downside, it's like, all right, like there's no way we go below 2150 or 22, or like we're not going to do that. So whenever it's like time to go to the downside, it's like, all right, I can estimate how much actual downside there is. And what they can do to kind of pull that down. So I get a little bit more aggressive with the covered calls. But with cash secured puts, can be a little tough. I did when we actually had a lot of success with cash secured puts back in December. I traded a lot of cash secured puts last year. They worked out very well. The 30s swung wildly in value. So those were a really, really good. Like I had a bunch. That was one of those rare times because we were going on that upcycle. That was one of those rare times I actually did trade in the money long calls. And then I had from those, I had a bunch of cash sitting on the side. I was like, what do I do with this? So I started hitting the cash secured puts, and I was able to rinse those like 3 or 4 times, like get on the spikes, was able to go up, do that kind of thing. So that was cool. But since then, I've been less cash heavy, and the prices have been really good with shares. Like for all of, when I had cash July and August, like prices were really, really good. So I was just like, I'll just buy shares. I'll just buy them. And then sell cover calls. Yeah, are we there? Are we right on max pay now? Oh, we're heading to it. How about that? We're gonna get into the max pay and finish. We're probably gonna deflect at like 2609 or like 2608, which is the the 500-minute moving average. That's also our closing price last week. How hilarious if we get a white weekly candle. That'll be very funny. We're super close. What was our open? I guess it depends. We opened exactly at 26. If we get a white candle and we close at 26, that's going to be very funny. It's going to be very funny. It does look like, yeah. This is very typical for 3 weeks into the cycle, though, to have this really, really flat week going into an OPEX. Oh, but this is going into an OPEX. This isn't an OPEX. Oh, very funny. We're like going right back to it. Very funny. In any case, I think the price will go down. I think in the short term, talked about this a little bit on the video today. I think the price will go down. Ape special dividend, price went down. Rocket special dividend, price went down. So usually what happens is, this is my understanding with the special dividends, before the dividend is issued, the dividend gets priced into the shares. Then when the dividend is issued, then the value of the dividend is then taken out of the share. And people then who don't want to do anything, if it's a warrant like the ape special dividend, a bunch of people got issued those, didn't want to do anything with it, just wanted to arbitrage the ape dividend and the shares. And so they just sold a lot of the dividend. They sold ape into the market, huge numbers. And the same thing on top of that too is like there's a lot of brokers that won't deliver the dividend. They will sell it immediately, get cash, and then they will deliver cash as a special dividend. So there's going to be a lot of brokers that are just instantly getting a bunch of warrants and then selling them right away. And they don't care because it's not their money. They don't care. So on dividend issuance day, maybe, as soon as it opens, there's like a little spike, they'll mess with the price, and then it's just going to get sold on this. That's what I think is going to happen. And then it'll recover, right? It'll recover after that. But that's what I think is what's going to happen. What's up, Guido? Nice, man. Yeah, Mrs. Lopiano is doing better today. Happy to say. Iced coffee in the fridge. Nice, man. I had some cold brew this morning. It was very good. Yeah. So that's same thing as an answer to this question, man. That's my thought. I think a bit of stalling kind of. A little bit of stalling probably mid-month, maybe hang out for October OPEX. Stay elevated, right? We won't go back to 22 or anything like that, I think. And then maybe bull into the second rate announcement, something like that. October 29th, it's going to be cat day and a rate cut, probably. So bullish day. Probably. I don't know. They're being a little frisky right now. Oh, we really are going back to 26. Look at that. We didn't even bounce off the 500 minute. Oh, reversal right now. Oh, excuse me. Oh, reversal. Tiny though. Tiny. Hilarious if we finished at the exact same price as last week. What's up, Dingus Pingus? Full ball. Yeah, if you went right in on Monday morning at 26, you enjoyed. Well, you had a bit of a roller coaster. That's the case this week, because you would have been up a lot off of that purchase, like immediately. And then yesterday would have been like, oh man. And then today it would have been like, oh yeah, again. So the classic GME shares experience. Yeah. What's up, Dion Ho? Good to see you, man. Mid-November top. I mean, if this does play out like a normal cycle, yeah, I could see that. Or I could see like, I don't know, do we get extended? Actually, I could see something looking like 2021, where we just kind of, we dip in November, maybe after institutional filing deadline. Maybe. Oh yeah. If you look at TraderView right here, we like. Those 500 lines, those like matter. Matter. Yeah, we bounced right off that thing. Shot up through it here and then decided to go up off it there. But now we're halfway back down already. Right at 26. Yeah, let me pull up November 21. So like, I mean, I don't think we'll go this far down, but right, we got this. Let me make this a little bigger. Let's see what PMO is doing here. So this is 4-hour PMO. Right, so when did we start moving? Here we actually got a mid-August. See, this is different. We got a mid-August. Was this around institutional filing deadline? Maybe slightly after. End of the dog days. We got a pump. Up we go. Traded down basically all of September. Flat October. And then October 29. Actually, this lines up with the, cat day thing here. Right. October 29 is when we started to take off, right? November 1st. And then shot up from, what was this, 40 something to 65. And then we came down all the way back to 45. And then shot up again all the way back to 60 something. And then super deep drop all the way down to 18. Wow, that's kind of wild that in March of 2022 we actually got down to 18. That's kind of nuts that we got that low. 18, 19. Yeah. Let's look at daily PMO. Not crazy, not super crazy here. So, I mean, we have gotten something like that. Did we get something like this in 23 also? Well, here we moved up in November. We were down. It'll be unique. All right, because we got the nice earnings thing, but then we got down and we were flat, and then we're back up with the rate cut, and then down again, and then cat day, and then up with the rate cut. So maybe something similar here. We gotta see. We gotta see when we get closer. See, here's the thing: is we might just kind of stay up, like not up 27 up or not up 30 up, but we might, stay at like 25 up or something. Where are lows going to be? That's the question. Is there a price I see for the warrants? They should be valued like similar to calls, which they added, right? Interestingly, which doesn't make any sense. they added October 26 calls. They added October OPEX calls with the announcement of the warrants. They added those. They don't normally put October OPEX that far out. They also have September 27s now, which is also weird. I don't know why they're doing this, but they added they added October 26th and September 27th. So they're just adding dates way out there, I think for hedging or something like that. But the October 32, do they have one? They sure do. Currently is priced at between 425 and 455. So even if you say a warrant is priced into that right now, then they should be going for, at these prices in the underlying, they should be going for around $4. That's the value. They should be going for around $4 per warrant, I think. Well, no, sorry. Yeah, $4. Yeah, because a leaps like that for October next year is $400, right? Because it's times 100. So the warrants should each be $4. That should be the price. Something like that. It's not going to be the exact same as an option, but. Do I think he hasn't sold his shares? I don't know, maybe. Maybe not. He may have, in order to take his Chewy position, is the thing. I don't know if he took the 9 million share GameStop position and the 9 million share Chewy position at the same time. I don't know. I don't know. I don't know what he's doing, right? I don't know what his strategies are. I wouldn't be surprised if he did close his position, but not because of, say, a loss of faith in the stock or something like that, but because it would protect him, right? And I think that's the thing. If in fact his whole options deal that he did with GameStop last year, if what he did was to try to trigger this major event for the company, I think he basically had as like a wild card up his sleeve that he could go, like, he would be blamed for doing a pump and dump. He would, they'd come after him. They're saying, this is ridiculous. He did this. He purposely did this in order to move the price up for his own personal profit. And then he could go, but I don't have a position in GameStop. And then wild card, he's got a 9 million share position in Chewy, and GameStop had nothing to do with it, right? That I think is my thought. There is maybe what he was going for there with the Chewy stuff, and that now you see it, now you don't. You got to make something disappear and make it reappear. Like a lot of that type of stuff, I think was, and that basically what he was going to do is he hypothesized that GameStop and Chewy were being suppressed together in the same basket of swaps. And he knew that if he did, number one, he could make things go crazy. He could help encourage things. He could throw a wrench into the works of whatever was going to happen over in GameStop. And he knew that he could benefit because it would mess with derivatives, right? It would mess with the derivatives. And Chewy would go nuts, and he could still profit, right? He would still, get the reward of doing that, and he would achieve his objective of showing that everything was a sham, and the real game is whatever's going on with derivatives. That's actually what moves around the price. So then, if they came after him to be like, "That's a pump and dump scheme," blah blah blah, you're doing all this, he's like, unless you want to come clean about the fact that you actually move the prices with your derivatives and hedging those derivatives, and that this is all made up and this is a crazy game publicly in order to get me to in trouble, let's say, for for doing whatever in GameStop because it would affect Chewy. It's not supposed to work that way, right? So I think that's what he was prepared to do. I think Ryan Cohen took advantage of the situation, enough to raise enough equity that it stifled too big of another move with his, with, I suppose, whatever he was doing. It's also possible he didn't. He showed us he could code, he could code whatever in terms of what was displayed on his Fidelity screen. So, maybe he already had that Chewy position or something. I don't know. I'm not going to speculate too much. But if he is planning on doing something, maybe he's been out of the play for a while. Maybe he's, waiting. Maybe he already has a position, right? And we just don't know it. He'd need to get something like 27 million shares, 24 million shares in order to file, to cross the filing threshold. So yes, that is more or less what I think. Yeah. Maybe there is a chance that if they want to front run the issuance, they could, the lid on things is going to raise up next week. It's going to go up to 28. So we could see some extension back into that like mid 27, 28 range again. Right now, 27, like this week, 27 was a pretty solid call wall on top of our price action, kind of keeping us from going too far beyond 27. That shrinks notably going into next week. So they could go ahead and that sort of options positioning says, all right, if they want to do this, they can push us up there. They can get people excited. And then they could do a big drop down to 24, the next week and into October OPEX, right? They could do that. But much below that, I don't see us going back to the 22s this soon, I would say. But 24-ish, yeah, I can see that. Especially drive those 25s for October OPEX out of the money. They would love to do that. Yeah. Pump it so they can sell a bunch of those. Yeah. Yeah. What do I think the convertible bondholders will do with the warrants? Will they sell on issuance day since they are long vol and don't care about owning the underlying shares? I mean, they might hold on to them as insurance if it's too difficult for them to close out their short position. So what I understand about the bond markets is that like the vast majority of convertible bonds are dead, right? They're just like they're way past the exercise point. Like implied volatility doesn't matter. They're past the exercise price and they're just sitting on people's books. What matters in that case, I suppose, is closing out short positions, something like that. So I don't know if there's a way for them to arbitrage the warrant exercise to close out the short hedges on the convertible bonds in case they want to actually be long. That's possible. They could do something like that. In which case it would be interesting for them to hold on to these guys. But I don't know. They'll probably also arb them. Like they'll swap them around. Guido says, this time around, I'm taking a page from Newton's videos. He would say, I think like what the MM wants to do and put together a solid plan in advance. Yeah. I'm also adding what I think our CEO is doing. Yeah, that's a good idea, man. That's the way to think about it, right? Think about think about what the think about what the market maker is going to try to do. That's kind of the basic thing about looking at the options. Um, what do you think the market maker? What do the options tell us about what the market maker is likely to want? Um, and they're going to want most of the time. They're going to want most of the options to close out of the money. That's what they're going to want. So, as a blanket way to put together a plan is, how would that work out? How could this situation unfold in a way that would work out best for them? And then if you think about that and guess that, works out pretty well actually. That's what happens. Hey, Day Swag, what's up, man? Yeah, I just started a little early because it gets late here in Cyprus. Want to make sure I'm a little more spry than if we were to start a little bit later. But good to see you, man. He did do that. He did do that. Remember, it's also his it is also his objective to expose market corruption. I think that's really what this guy's all about. But yeah, he could have a secret 15 million. Nice picture, by the way. He could have a secret 15 million share GameStop position. He absolutely could. None of us would know. Nobody would know because he still wouldn't have to file. So it seems even more volatility is still possible next week if they choose to make that move. Interesting. Yeah, man. Yeah. Yeah. Cheers. I think so. In the 25 to 28 range, right? They've set that up. I'll show you what this looks like, right? I put this in the article here. I get my name to go away. We got this thing. How do we get names? That's better. Let's try this. This work? It's a little smaller, but if I do this, I kind of block it. That's all right. So this thing is what we've got. No, this is OpEx. Here we are. Right. Look at this concentration here. So 25 to our downside, 28 to the upside. 28 right now is call wall. Largest OI position is 25, but call wall right now is at 28. So all of this is a decent area for play. So we could run up and down this area and it would still fit within our major gamma exposure positions. This I think is a little less likely, right? Because 28 is around where the price of the second convertible bonds are. I think that's why this is a major upside resistance here. I think that's why so many traders have probably situated their positions there, as opposed to say like 27 or 29 or something. We can look at some of these strikes too. So for next week, let's just take a look. Yeah, 28 is definitely short call skewed. So those will be resistant as we approach them. Net OI shift is skewed towards the bid, which means they're skewed towards short calls. 25, interestingly, is also skewed towards short calls. So traders into next week are actually short. They're short IV and they're short the price. Well, they're neutral price. The 25s, whoever sold the 25s is bearish on price. 28 is neutral to slightly bullish on price, but still short volatility. 27s are slightly, ever so slightly long. But yeah, seeing these out of the money is going to please the market maker. The 30s have got to be short. They're not. They're neutral mostly. Interesting. They're about dead even. Mids are probably mostly short, but hard to say. Hard to say. Yeah. Hey, man. Happy to hear it. I was just in Asia not too long ago with Mrs. Mojo. We were in Thailand for a month. We had streams. We had our Thailand streams. It was a good time. Yes. If the expiry is after the 3rd, I think if it's before the 3rd, no. If it's for today, no. Like if you're getting assigned now, no. I think also if you're getting assigned, yeah, I think if you're getting assigned on October 3rd, I think still no. I think you have to have the shares by market close on the 3rd. If you get assigned, you're getting assigned after market close, and I don't think the shares aren't yours until after market close. Typically, when I look at my account, like if I've been assigned, they don't disappear until like Saturday, or like maybe it's late on Friday night or something like that, before midnight. But I think you have to have the shares on market close. Let's check that out. Let's check that out. Let's check out ex-dividend rules. The ex-dividend date for stocks is usually set as the record date or one business day before if the record date is not a business day. If you purchase a stock on its ex-dividend date or after, you will not receive the dividend. That is typical. So I think you have to purchase the stock by the 2nd. If you purchase it on the 2nd, you're good. Yeah. Danny's got it right here. Dandy. So October 2nd is your last day. So if you have cash secured puts that expire on the 3rd, unless you're getting assigned before then you won't get the warrant. But if you close them on the 2nd and then buy shares, and then you have those shares by the 3rd, then you get them. But yeah, nice one, Dan. So what do you guys think about our discussions, our Bible discussions this week? You get a chance to catch the videos? apple one. See, this is a funny one. Everybody always like imagines the fruit of the tree of the knowledge of good and evil as an apple. I remember this. It never says apple, right? Except that apples are often metonymy or something like that for fruit. But yeah, people often like imagine in the story like Eve is eating an apple. It happens in a lot of like myths and stuff, right? Somebody eats an apple. Snow White has an apple. Um, the myth of Isaac Newton is an apple. In Greek mythology, Eris has the apple of discord, the golden apple. So it's very interesting. That's what we call an archetypal image, right? So like, it's one of those things where for enough people, when you say a certain word or term or talk about a narrative situation, for some reason, the fruit of choice is an apple. Yeah, apple a day. The apple a day keeps the doctor away. Why not an orange, right? Why not an orange? Or we say things like the apple of my eye, or there's the original German name for a potato is an Erdapfel, which means an apple of the earth. Erdapfel. We also think about what's another one? Like pomme. Pomme in French is also like the idea of an apple. So you have like pomegranate, apple grenade, pomme de terre, which is like Erdapfel, right? Apple of the earth. Apple bottom jeans, boots with the fur. Yeah, hey, cheers, man. Yeah, that's actually a great look at that picture of you and your family. That looks great. You, your wife, your 2 kids. That looks awesome, man. Congrats. That's such a blessing. Way to go, man. Yeah, I mean, one of the things that I realized too is like if you don't like going into this, right? And going into doing this whole GameStop thing, this whole trying to understand this and trying to figure this out, right? Why I did it. It was like, how I structured my strategy, what gave me the inspiration to structure my strategy was like get my values in line and like organize my perspective the right way. When I first part of the reason I started doing this was like, when I first started trying to trade back in 2020, right? My approach was very much like my approach to the world in general. What attracted me, right? The types of strategies that attracted me to try were ways that I engaged with the world as like a younger guy and like a guy in grad school or something who was just interested in all kinds of stuff, and I was just going in all kinds of directions. Oh, let me try this. Let me do this. Let me do this. Let me do just a million things, right? And did not have, on the one hand, a kind of discernment to figure out, no, this goes first, then this goes second, then comes this, and to like, figure that out, or, to say, nope, I'm going to focus in right on this one thing. And, I failed with the approaches that I was taking, even though I saw, let's say, right, I saw the right plays, or I had a sense of where the value was. I couldn't, connect properly with how to actualize on that stuff. And so it took me not just a while of like trying to figure out how to do trading and learning that and figuring out how that would work, but also um, changing my orientation towards how I view the world. And a lot of that was like, oh, okay, like let me try to take more seriously like what sorts of perspectives, what sorts of ways of viewing value and approaching value and engaging with the world are contained in the biblical tradition, right? Why has that? Right? There's a very powerful argument that says, like, why, you know, why have Western societies been able to achieve what they've been able to achieve, right? There's a better way, people say Western because they mean Christian and then also Jewish, something like that. Um, why are the societies that descend from those traditions, why have they been able to achieve what they've been able to achieve? And then, there are a lot of reasons. It's not an easy question. It's not filled with easy answers. But there is something notable about this collection of wisdom, about these stories, and about, their editing into a canon, and then the building out of a ritual apparatus for the collective ingraining, entraining, memorialization of the values and perspectives that are contained in these stories. So, when I started this channel and when I started doing this stuff, it was my objective to try to, yes, like I wanted to generally figure out if I could get this right. But then once I kind of had the vision of, oh, this is what I think is going to work. And now that I have the experience of, oh, yeah, it works. Um, Starting up the channel was a decision because I wanted to help people, just like I have in other areas of my life, right? Once you figure out, like, how to make the money, and it's like enough to meet your goals, it's like kind of bored. It's not, it doesn't get as exciting. But what really excites me is like being able to help other people do that too. And that's why I made the channel, because it's like, this is, talking to you guys, making videos, writing stuff up, trying to teach people things. Like, that's really what my vocation in life is. And so, if I'm going to come out here and say like, oh, hey, here's what I did to be successful, like, it's not just using the trading strategies. Like, yes, you know that they work, right? Like, they work, but how did I figure out that they worked? I figured out that they worked, and I figured out how to structure this, and I figured out not just how, like, okay, here's this one trick pony, or here's this thing, or here's this thing, or here's this thing, but how do all these things work together, and how how do I cultivate the appropriate discipline, the pertinent discipline, in order to commit to these strategies and stick with them and trust that they are the best thing for me meeting my goals going forward, right? And a lot of that starts with this, right? Starts with also, right? Really, the you know stuff that's contained in the Bible is the foundation for that human behavioral extension of how I conduct my life, or and aim to conduct my life, that led me to these results and allows me to continue to benefit from these results in a meaningful way. So yeah, so that's why I want to share these with you guys too. Hey, congrats on number 3 then. Way to go. Yeah, and that's why it's a constant process of making those preparations, right? We have to prepare ourselves. Responsibility does not come to us until we are prepared to bear it, right? So if there is a responsibility that you wish to be entrusted with, prepare for it. That's all I can say there, right? Cheers to that, man. Thank you for your support. Fernell has something I do not understand. Purchasing shares via short puts give no warrant, but long calls, yes. Expiration date of the options are after the 3rd of October. If the expiration date of the short put uh, is after, let's see if it's after. How will that work? I think yes. Long calls will. Think, but because it's like when it depends on when the options chain makes the transition. Like that's the thing. It's like you have to. The current options chain will go over so that if you exercise, because that's the thing is they're opened, like they were opened beforehand. So I guess, yeah, a short put will, but I don't think for the 3rd, because it's a weird gray area where it's after the ex-dividend date, but before the issuance date. I think so. As in the weirdness about the calls and the puts? Yeah, I think it's just October 3rd that's kind of weird. I think it's just October 3rd that's kind of weird. Ooh, what are we looking at here? Oh, well, this is our stonk, guys. Just stonking away. Classic GME, am I right? Looks like it's dropping down to max pain, and then all of a sudden in the last few minutes of the day, we're just going to go straight 1 minute, like 11 green candles in a row to close at 2650. Still going. One, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We're on our 12th green candle. So do we close at VWAP? Last minute, we just drop down to 2636. Oh, right from the horse's mouth, eh? Funny if we close on VWAP. We get a bunch of calls there. Let's see. We do have a lot coming in. Oh, wow, yeah. Kind of mixed. But depends on how big the orders are. Oh, no, not 100. There we go. Oh, these are not crazy bullish. But overall on the day, bullish skew. Yeah. Let's see. For what date though? Is it for next week? 2028's already being sold here. Hmm. Do. Yeah, that's right. These came in. But that doesn't seem like that much premium. How many shares would that be? I mean, it does correspond. You're right. It does correspond like right with it is slightly before this move. Maybe it just like triggered like a dog pile thing. Cause you're right. It is right before we start to move. Cause we're still down. Like price is still down. And then these spike right here. So these come in first. Then the price starts to move. Let me look for these two. So it's like a poor man's cover call. But for next week, why isn't this loading? What is going on? All right, well, that page is not working. Yeah. Maybe he's just a high conviction poor man, you know? with a lot of debt. Maybe he got a home loan and was just like leaps. Yeah, I don't know. It's a weird spread. Unless this guy is basically thinking like, oh, we're definitely going up. I want to make money off of these in the money calls. Also, there's no way it's going above 30. So while I wait for these to go up in value, I'll sell covered calls on it. I've done that before, not with that much money, but I've done that before. Hey, nice man. Way to go. What was that play like? Let me see this. 0 DT. What are these like today? Probably a good contract to trade. Oh yeah. That's a nice move. Those peaked at 23 cents today, so very cool. Very cool. He's the Gamma Chad. Nice. Oh, nice. That is very close to the peak. That is very close to the peak. And you got the commission-free closure at 0.03. Beautiful. That's a good day. 17 cents on the day like that. Very nice. Let's see Paul Allen's covered call. See this, Bateman? This is bone. Oh, just with Schwab then. Schwab, if you close a short call or put below 5 cents, it's free. It's free to close it. No commission. Yeah. Next week is the week for the ex-dividend. Yeah, man. Schwab, you get if you have a big enough account, right? They'll give you really nice deals on your commissions. They will not charge you to close contracts below 5 cents. You know, you can get, if a market maker falls asleep, you can do that round trippy thing until you get rule 390'd. They'll let you do that. So oh, that's nice. Less than 0.25 free close? What? I know. Sometimes if we're really amped, I'll try to go later. But I'm already, it's like, it's already after 11. I'm starting to get sleepy. By riding them, do you mean short? I hope that's what you mean. Hello, consequences of my own actions. How are you today? Welcome. Are you long 29s, Johnny? Are you long? Oh, thank God. Thank God. Don't do that to me, Johnny. Don't do that to me. I mean, watch, you'd probably do it and then it would work, but whatever. Nice. Nice, nice, nice. Oh, nice. Well, I'm glad it's early enough for you then, man. Welcome. Fidelity's closed below 65 cents for free. It's very interesting. You always think it's going to work, right? And then it doesn't, especially the out of the money ones. Especially out of the money. So difficult. It's designed for you to lose. It's designed for you to lose. Maybe, but high confidence for me is around 28. 28-ish, I think, is probably what is max we see prior to October 7th. That's what I think. But don't ban bet yourself. You don't have to ban bet yourself. That's fine. I'll just be wrong, right? If I'm wrong, I'll just be wrong. That's fine. Oh, wow. Yeah. A little post close, a little additional axion there up to 2660. What? That's fun. We're very much in cycle now. This is total on cycle behavior. Hello, Diaper King. Yeah, so the current options chain will be ported over to a different options chain called GME1. And all of the current contracts that expire after October 3rd will require the delivery not only of 100 shares, but also 10 warrants. And a new options chain will open up that doesn't have to do with the warrants at all. That will just be called GME. Saying 28 is what I think is the highest we'll see prior to dividend issuance on October 7th. That's the highest I think we'll see. No, because they don't have to deliver them. They don't have to. They have to at some point, but all that's going to happen is in their accounts on dividend issuance day, if they're short 100,000 shares of GameStop, and it's going to show in their accounts just like you do when you trade options, right? You go ahead, you short whatever 100 contracts, gets you a negative 100. So if in their account they're short 100,000 shares of GameStop, all of a sudden, just below that, and below that negative 100,000 GME, it's going to be negative 10,000 GME.WS. That's it. That's what's going to happen. They're not going to have to deliver those immediately. However, if I think it's going to work in the way that options work, in that if and when warrant holders exercise, whoever is short those warrants can be assigned, just in the way that a short call or a short put can be assigned. But they won't get assigned for something that isn't specifically warrant execution. So if you buy October, see, this is what I think. This is the reason that I think they opened up the October calls for 2026. Is if you're short, whatever 100 warrants, you can buy one October call for October 16th, and you're hedged. So that's what I think they're going to do. If they're short for however many warrants they are short, now in addition to being short the stock, they're just going to go out. They'll go buy leaps. They'll go buy the October calls for next year, so that if they get assigned, right, all of a sudden, right. So let's say 1,000 apes go like, all right, we're exercising our warrants, and this particular institution gets assigned. They go, oh, well, we don't have the shares. What do we do? Well, we could go out and buy them ourselves. We don't want to do that. So we will go and buy derivatives that will hedge us. So we're hedged. So what can we do? Well, if we're long these calls, that hedges the warrants. They exercise the calls. Then it's on the options market maker to go and purchase shares. So then why are they going to put that on the options market maker? Because the options market maker will go get them their shares at the agreed upon price, right, at the strike price, whatever it is. So that's fine. And the options market maker is happy to do that because the options market maker is a designated market maker, meaning all of the SEC rules, all the FINRA, the DTCC rulebook stuff that applies to bona fide market making activity, they are able to take advantage of. Meaning they can take advantage of, tapping into ETFs. They can take advantage of cash in lieu of securities. They can take advantage of T plus 35. They can take advantage of T plus 35 extension via, emergency letter written to the SEC, right? Something, right? They can, or the DTCC. They can do that stuff. And so then it'll be fine, right? So I don't see this. I don't see this necessarily as like an imminent structural. They're going to be forced to cover. They're buying options now, so they are not forced to cover. Or if they are, if the things get exercised, then that thing is hedged for them, so they're fine. They're not. I don't think they're worried about that. I think the price per warrant initially is going to be around $4. I think it's going to be around $4. That is what currently October 2026 options are priced at right now. If you then also take out the value of 10 warrants. So if you assume the value of a warrant, right, because they're trading right now at our current prices around between like 430 and 460, something like that. So if you assume a warrant is worth $4, 10 warrants is around $40. So divide by 100, 40 cents. Take that 40 cents out of the price of an option. What you get is something around $400 for the price of an option. Divide that by 100. You get $4. That's going to be the price of one warrant. at the 32. So, and by the price of an option, I mean a $32 call for October 16, 2026. Roughly that. So assuming our price is right here, they're going to be around $4. They should, that is a proper pricing for them. They probably went up a little bit because we're doing something after hours right here. We're like drifting up into 2660 land. Yeah, they're slightly higher now. But the mid is 440. No, they're exactly $4. They're exactly $4 priced right now at this price. So, yeah, they'll be around $4. Oh man, good luck. Friday meetings. I don't want this. Yeah, they always, they always got the stuff figured out, man. The closest the market actually came to having real structural problems was 2021. This is not, and it's not in Ryan Cohen's interest to do that. He wants to return, his objective is to bring shareholders value. It's to return shareholder value. That's what he wants. If he breaks the market, it's hard for him to do that. Yeah. Do I think we'll be below 27 by monthly OPEX? Yes. I think that's a safe bet based on, I mean, if I just go off of my typical analytics here, we closed right on the call wall, which was at 26, right just above the call wall on 1026. No, 1026. Last week, September OPEX. Right here, we have a call wall. We got 30. We got 25. It'll be an interesting one. It'll be an interesting one because this structure here, this 2530, is actually left over from back prior to the second bond offering. I'm leaning towards yes, but I think we have to see how this ends up getting filled in. $10K, that's even. There are 31,700 calls at 25. $47,000 at 30. Certainly confident we'll be below 30. 27. I think so. Not after hours. Nope. The print 4 p.m. Eastern time market close is the print. So our print was 2642. So 2650s are not being assigned. They're worthless. There are options that have non-standard prints. I think SPY options might work that way. Zero DTE SPY options might work that way, but not for GameStop. Do I think he'll come back with a screenshot? No. I mean, he could, but I don't know what he would be trying to do, is the thing. What would that do? Maybe it'll pump the price a little bit. Would that bring people to exercise? I mean, if he did it, maybe if he came on and exercised his warrants, but why would he do that? I don't think he would do that now. Like the time to exercise the warrants is like the optimal time is like when the price is above 32. So when we're like in that zone of the convertible bonds, like past the like auto convert for the convertible bonds, that's like the ideal time to exercise those. What's funny is, right, a lot of people were saying stuff about dilution. And so he's like, all right, fine, here's a non-dilutive offering. And now people who have the warrants are just like, oh, what? I don't want to exercise these at 32. It's like, well, look, we're getting institutions to pay this amount of money for these. Here's your opportunity. Do you want to do it? Well, you don't? Okay. Is it worth selling your leaps in order to get warrants? Well, the question is, do you want to deleverage? Are you happy deleveraging right now? If it were me, and right, I can't make this decision for you. If it were me, because why would I be trading a long leveraged instrument like that? Because I was high conviction that we'd be moving up very soon. I am not super high conviction right now that we will be moving up higher very soon. If they're leaps, I don't know what you mean by leaps. Do you mean for January 2026? Because that's already a leaps. That's a leaps expiry, but those don't have that much time on them. So if you want to deleverage, which maybe you're not going to be as exposed to the upside or the downside. My personal thought on what will happen with the issuing of the warrants, right, is, I mean, if you have leaps, they're going to be able to get you warrants too. If you're holding leaps for next year at this point, when you exercise those, you can get warrants for them. In the future. The question is, do you want the warrants now or do you want the warrants in the future? Do you want leveraged exposure to the warrants? Because now you're also going to have leveraged exposure to the warrants. That is what the call does. That is what the long call does. You have leverage exposure to the stock. You have leverage exposure now to the warrants too. Shares normal exposure to the warrants is 0.1. So you have 100x exposure to the warrants, meaning you have exposure to 10 warrants. And then whatever the strike price, whatever you're paying for the strike price is then how your capital is leveraged towards that contract. So if you're buying a contract right now that is, valued at $2 and $2.65 or whatever, then you have 10x leverage. If it's $5, right, then you have 5x leverage. If it's $10, then you have 2.6x leverage, right, on your cash. Jan 27, 26. Okay. So that's in the money. That's not crazy leverage, which is actually smart. What's the price on that? These are 9.5. So your leverage. So that's close to 3x leverage. So you're getting exposure. If you use capital in the maximum way, right, you're getting 3 times the exposure for your money to shares and warrants than you would otherwise. You're still entitled to warrants if you want to exercise those. Hey man, enjoy that time with family. Cheers, my friend. So that's about where they are now. I mean, you're in the ballpark. And your break-even price at X3 is $29.85. Again, not a bad deal for being for 2027. Not a bad deal, actually. Maybe not the best deal, but not a bad deal necessarily. The question is, what are the odds that we are essentially above 29.85 at some point between now and January 2027? I would say there's a decent chance of that. So not bad, right? If you want to average down on those, you might have some opportunities to average down on those. Not the worst thing in the world, right? You see the difference too? See, this is why, like, I'm not necessarily saying go long on options right now. Go long on calls. I'm not saying that. But do you see the difference? Like, our friend Mr. B Gupti here has shown us, gives us a good example about how much less punishing buying something farther out and at a better, like, with intrinsic value in it, right? So he was smart. He targeted the 20s. Why is it smart to target the 20s? Because those are probably not going to zero. They're probably not even going sub $2 a contract. So he's not really at risk of 100% loss. So, I mean, yes, it could happen, right? I'm not going to say, never, right? But very different risk profile compared to buying out of the money calls that are 90x leverage or something, right? 3x leverage, respectable. If you get it right, like, fantastic returns. Much less risky, right? And so you can also make that equation. It's easier to do kind of to figure the odds on something like, okay, $20 strike price, right? Just like I did there. What are the odds that GameStop stock is at some point between now and a year and 4 months from now above 29.85? Good chance. Good chance. So not as bad of a trade as you think. Yeah, there's something to that, hey. There's something in the symbols there. Hey, what's up, Sharon? Next week open. I don't know. I don't know what it'll look like. That's going to be the 29th, right? I think basically I think I said that, high confidence price action is going to be between 25 and 28. Good chance for some volatility. Maybe more stuff like what we saw today. Thinking probably we move down the following week after a little bit after the dividend issuance date. That's largely it's a quick summary there. Anton's got a lot of January 27, 20C. Interesting. Underperforming the underlying a lot since earnings. Well, so just like, how would this be? What would be the analogy here? So if you were buying a 20C that was much closer to expiry, right, it would track the underlying pretty closely. The most of the price swings you'd see would be with the intrinsic value there. Why are the ones that are farther out maybe not? Is because of all the time that is in those contracts, the changing in price is going to be muted because of how much time there is, right? They're not going to be as responsive because of all the time that's in them. There's probably some charm component that's involved there. Because of all the time, the swings in delta are going to be a lot more muffled. What's the IV on these contracts too? The IV is also lower. The IV is low. 63. Not crazy low, but low. Yeah. Yes, I am. So I'm putting that into asset value. So it's cash and cash-like securities and Bitcoin, put Bitcoin in there, minus liabilities. So take that out and then divide by the current share count, 447 million. So the non-diluted share count, and then multiply that by 2. That's our floor. Yeah, that's one. I think too, I imagine the spread is pretty wide on these. Yeah, the spread is $1. So it's going to quote you the mid, and the mid is going to be 965. That's why. That's how it's going to mark it. Yeah, you have to have it enabled in your options permissions. I think you have to have level 3 options. I think that's a level 3 trade. But it allows you to cover. It allows you to use long calls to cover your. To cover calls. As far as, like when I've done them, it just lets me do it, right? Like I just go in, and if I'm long the calls, I can, I can short other calls on top of it. It would be missed extrinsic. It wouldn't be missed intrinsic. As far as I can tell. Because the ask definitely incorporates everything in that sum. The ask is very much overpriced. The bid is very much underpriced. And you might say the mid is also underpriced. but that probably means, right, if you're selling and you go and sell at the mid, then yeah, then they want to buy slightly below fair value because they can probably sell it for what the intrinsic, they want to, yeah, they want to have a little bit of an edge there. Yeah. Yep. That's what's going on. That's what's going on. So yeah, should be another very interesting week next week. Yeah, we had some pretty cool ups and downs here. Looking forward to seeing what it looks like out of the gate. I can only imagine we're going to have some interesting price action as we get closer to that ex-dividend date on Thursday. Well, Friday is the ex-dividend date. Thursday is the date where you got to have your shares if you want the warrants delivered. If you buy shares straight up on Friday, they're not going to give you the warrants for them. Wouldn't be surprised if we saw some interesting, whoop-de-doos going into Thursday, and then maybe we start to move slightly down on the ex-dividend date, and then issuance date on the 7th, which is Tuesday. We move down a bit more. Something like that. So I think we'll wrap that there for today, guys. Excellent questions. Great to see you guys as always. Thanks as always to everybody for all your encouragement, support, the whole thing. I hope these I hope live streams, I hope videos, I hope all this is helpful for you guys. And looking forward to seeing you guys next week on the ex-dividend date. It's going to be a good time. So thanks everybody. God bless. And we'll see you next week.